Governments alone can't do this. The private sector alone can't do this. And it's about building a coalition of the willing who can actually partner together to deliver on these 17 critical issues. So I think that partnership is important. That's why we're trying to partner and find ways to get the private investment sector connected.
Welcome to The Greener Way. I'm your host, Rosemary Petrus, Senior Journalist at FS Sustainability. We are recording on Gadigal land and we pay our respects to traditional custodians of country and elders past, present and emerging. After 20 years of progress, we are now seeing rising inequality and poverty reaching levels not seen in a century, according to the UNDP. In response, there's been an uptick in demand for companies to report on social impact. But of course, poverty is not the only critical UN Sustainable Development Goal. There are actually 17 of them. To learn more, we have Reid Taylor-Price on the show. Welcome to the show, Reid.
Thanks, Rose. Appreciate it. Appreciate you having me join you today and talk about what this critical issue. So thank you very much.
Reid is the founder of Investors for Impact and director and managing partner at Alpencrest Capital. Reid, can you tell us about the role investors play in achieving UN Sustainable Development Goals?
So you mentioned that I'm a founder of Investors for Impact. We're an initiative that's really designed to amplify the role that UN SDGs play in helping educate the broader public how we can create a more sustainable future, and also how we can partner with Australia's investment community to raise money for critical causes. And we align it with the SDG framework. And so I think there's two parts to your question as it relates to philanthropic giving. One, why the investment community? And two, why SDGs? So why the investment community? I'm from the US, where I think there's perhaps a greater level of awareness around philanthropic giving. And early in my career, I was exposed to a gentleman named Paul Tudor Jones, a hedge fund manager who back in the late 80s created the Robin Hood Foundation, which was a group of hedge fund managers coming together really to help raise money for impoverished children in the New York area. Fast forward to today, and that's one of the world's largest philanthropic donors on an annual basis. And I think it's a reflection of the investment community, which I define very broadly, but sits in a very privileged position economically and socially. And so I think that we have a responsibility to give back to society. And frankly, I'd like to see more of that done in Australia, or at least more talked about. Why the SDGs? The UN Sustainable Development Goals, which is a set of 17 critical issues that you need to solve for, and was ratified by all of the UN member countries, is a common framework that's used by the investment community when it comes to impact investing. But it's also a language that's used by philanthropies to help identify what critical causes that they might be helping with, whether it's zero hunger, gender inequality, clean water and sanitation. And because we speak the same language, it actually gives us a way of identifying what's important to us as investors. And because we speak that same language, partnering with philanthropy that achieves those goals. So to me, there's more synergies and commonalities than differences.
Some listeners might be asking, why should I look at philanthropy? What's in it for investors from a purely financial perspective?
Yeah, what's in it for me? That's a very investor-centric question. Look, if you think about it, really, all investment is a deferral of current consumption, right? In exchange for a future benefit of greater expected value. Isn't that what having a positive impact on a sustainable future is all about, right? I have an 8-year-old daughter, and when I think about the decisions that I make and where I want to allocate capital, I think about myself, I think about my life, I think about her, right? I think about her life. And I think that we're just at a stage in human development where partnering with philanthropies that can plug the gap and drive positive change helps. You started the podcast talking about poverty, eradicating poverty. I think it's wonderful when investment managers can allocate capital in a way that drives positive change and positive economic outcomes. But there are frankly some things that are very difficult to achieve from a purely investments perspective. And I mean, eradicating poverty is a great example because there aren't a lot of business plans where your target market is impoverished, right? They just don't have money to buy goods and services. So there's just not a lot of capital that goes in to supplying goods and services to that cohort. So you almost need charities to come and to help bridge that gap.
There are 17 UN Sustainable Development Goals, and of course, many are interconnected. Which do you believe are the most critical to address right now?
They're all important, right? So if I had to pick two, I would probably say the one that's most relevant to our organization is goal number 17, which is partnership for the goals. So this is about multi-stakeholder partnerships and the fact that governments alone can't do this. The private sector alone can't do this. And it's about building a coalition of the willing who can actually partner together to deliver on these 17 critical issues. So I think that partnership is important. That's why we're trying to partner and find ways to get the private investment sector connected. The other one, which the answer might not be a sustainable answer, but quality education. This year we're supporting UNICEF and we're focusing on quality education and the importance. But when I think about quality education, I am a very strong advocate of democracy. And I think democracy works when you have a highly educated population. If you don't start with quality education and people who can make rational, logical, balanced decisions, then you end up with, dare I say, politicians that pander to the lowest common denominator. And I think that's that's the risk to democracy. So if we really want to see a free and open society based on democratic values, then I think it starts by educating our kids.
Looking now at the finance world, there has been a notable uptick in investment managers becoming signatories to the UN Principles for Responsible Investment. Is this
Hmm.
a sign of real change in the sector?
Yes and no. Over the last 5 years, the number of signatories to the UN PRI in Australia has nearly doubled. And my firm, Alpencrest Capital, we're a third party marketer and placement agent. So we see firsthand that a lot of that is driven by investor demand, particularly the next generation. And when you have stakeholders that are very impact focused and demanding that their investments have some level of ESG or sustainability, you'd be surprised how quickly ESG and sustainability works its way into marketing materials, right? So, look, I mean, I can't speak for everyone. I think that for most firms, we're on the right track. For a lot of them, I think it's marketing. But I'm going to go off on a little sidebar here. I think part of it is also just the way we think about capitalism philosophically. There was a time when capitalism, fascism, communism, other isms were competing. And Adam Smith, who talked about the invisible hand, people acting in their own self-interests will drive better social and economic outcomes. But that was at a time when things didn't change very rapidly. And decisions, when you made a decision, you thought 20 years out. I think we're in a society where most people have trouble looking 15 seconds out. And most companies and individuals are making decisions for the next quarter or the next year. So I think that if we start, and this is not just the finance sector and investment sector, this is society. If we start thinking about a longer time horizon and our scale changes, I think what we'll find is that the things that are in our self-interest 20, 30 years down the road may be different from what's in our self-interest tomorrow. So, and I think that's changing, but I think systemically there's some stuff in society that we need to address to get on the right track.
Now, there is real concern around greenwashing and social washing and an ongoing crackdown from the corporate regulator. How can investors cut through the noise and ensure that they're driving meaningful change and avoid social washing?
Yeah, that's a good one because, you know, last year APRA came out, said we have three big issues that we're focusing on, right? Valuation policy, liquidity, and, ESG greenwashing. There have been instances of it. And that's to my earlier comment around how much of this is actually marketing as opposed to how much of this is real. And I can't give you an answer as to what's what. I think on the margin, you have a small cohort which deeply embed sustainability, impact, driving a better future and better investment outcomes. You also have on the margin a cohort where this is just complete marketing fluff. And in the middle, right, that's where you have the biggest opportunity to say, what are we going to do about this? But your question was how do we cut through the noise, right? How do we ensure that we're making a difference? Well, when I think about our community, as investors, I think number one, put your money where your mouth is, right? Like walk the walk. So if you're talking about how important positive impact is, and you say this is a part of our culture, then I think you have to find ways to show that. And it has to be in the way that you operate business practices. It has to be in the way that you embrace philanthropic giving. Another one is, don't be afraid of partnerships. They could be public-private partnerships and infrastructure that drive positive change. It could be partnering with, philanthropic organizations that help drive positive change. But, we're not operating in a zero-sum game world here. We're operating in an environment where we can all work together. And so I think the ones that do the best job, they build a coalition of like-minded people to try to solve problems. And so, yeah, I think there's a lot of work to do. It makes it really, really hard for investors right now to discern who's making a difference and who's not. I personally think that the UN SDGs are a wonderful framework for not only identifying critical issues, but because there are a number of sub-targets and measures that are included within each, you actually have the ability to go in and measure your impact against each of those goals. So I think the best outcomes are when an investor says, these are the things that are most important to me. And I can align those with these 4 or 5 SDGs. And I will say a lot of the industry super funds in Australia have done a very good job of doing just that. And then they work backwards to say, how do we build a framework where we can measure it? Because if you can measure it, you can manage it, and you can benchmark it. And that's what we're good at in investing. So if we start thinking along those lines, we do more, then I think we hold ourselves accountable and we can demonstrate the progress we make.
Thank you so much for your time today. Where can people find out more about the important work that you're doing?
Well, I'm not doing any important work. The important work, I think, is done by those that are at the forefront of figuring out how to take this capitalist investment model that we have and then layer it with. So you got a lot of really exceptional heads of ESG in the industry. You've got a lot of investment firms, publicly traded corporations, sophisticated investors that are doing an amazing job. You also have a lot of organizations that plug the gap. Some of them are governmental, some are NGOs, some are pure user-funded, donor-funded philanthropies. So what we do is we serve as kind of a means to amplify the message, educate the broader public, hopefully along the way, identify some philanthropies that we think are doing an exceptional job against these SDGs, like UNICEF, and raise awareness and money for them. If you want to learn more about Investors for Impact, you can go to our website, which is investorsforimpact.org.
Until next time, then, I'm Rosemary Petrus, and thank you for listening to The Greener Way.
The Greener Way podcast is a product of FS Sustainability, a show about people, the planet, and investing in our collective future. All information in this podcast is for education and entertainment purposes only. The Greener Way podcast gives listeners access to information and educational content provided by discussing numerous financial sustainable options and our featured guests. It is not intended as a substitute for professional, legal, or tax advice. The hosts of The Greener Way are not financial professionals and are not aware of your personal financial circumstances. Before making any financial decisions, you should read the product disclosure statement, and if necessary, consult a licensed financial professional. For more information, head to the disclaimer page on the FS Sustainability website, fssustainability.com.au.